Thank you very much, Stephen. Well, we start here this afternoon. The FirstRand Group, which owns FNB, Rand Merchant Bank, West Bank and Aldermore, has declared its highest dividend in its history in its 2002 full-year results. FirstRand's earnings increased by 23% to 32.7 billion rands, the bulk of which came from FNB and Rand Merchant Bank by a quarter. The earnings of FNB grew by 22% and RMB by 17%. FirstRand, valued at 373 billion rands on the JSE, is South Africa's largest banking group by market value. And when we talk to this particular bank, it's one of those banks that have done well in the past year. And we're joined by Jacques Celliers, who is the FNB CEO when it comes to these particular results. Jacques, you must be quite happy, and your shareholders are quite happy as well this afternoon, because you are forking out a record 26 billion rand to shareholders in dividend for the full year. But what were the events that actually made an impact on your results? The past year has been quite a dramatic one indeed.
Well, yeah, thank you very much, and opportunity to spend some time with you, the listeners. I think, you know, we are celebrating today not necessarily our results, but more importantly our customers' results. You know, this is an unbelievable business, but it's only possible if our clients are able to navigate all the complexities of the economy. So we, as you all know, hit a 2020 COVID year, which was very, very complicated to navigate. And when we set out our strategy, then it was about making sure we get our customers through the pandemic, and ensuring that by the time we get to the other side of the pandemic, that all of our stakeholders, regulators, customers, shareholders, should all be well positioned for a growth phase. And I think what's pleasing to see is that all of our strategies have worked out. We're in a very good position from a liability franchise perspective. Incredible growth, the highest 13% growth on to get to 750 billion rands worth of liabilities is the biggest retail deposit in the country. That supports our growth strategies well. Our transactional franchises are cooking. Our innovations are pumping. Our value propositions are ready for growth. So we're in a very, very grateful position that we could support our customers in their growth from here.
The last time we spoke, you spoke about the customers, how resilient they have been. That was in the interim results. But when you look back at 2020 and 2021 somewhat, it was a period where there were a lot of car repossessions, loss of homes that actually topped the talking points during that time. How are customers actually doing, looking at debt repayments? Because Stats SA just today said that summonses related to debt or customers unable to keep up with payments are up 13% in the recent past. How are the customers really doing right now?
Yeah, I mean, I think that's an important question. There are many parts of our economy that are struggling. You could see some sectors still not yet recovered properly. You could also see some customers still struggling. But I must, sort of point to the fact that our strategy over a number of years has been positioned into the better risk buckets of the local economy. And fortunately, our client base have been able to strengthen their balance sheets. Our experience for our customers certainly has not been, record levels of repossessions. We have been very good at helping our clients restructure their financial affairs, getting them through COVID. As you know, we put lots of relief into our customers. And what's pleasing is at the end of that relief period, as customers are now coming out, their businesses are strong, their jobs are intact, and in many cases, they have stronger balance sheets now than they had when they went into COVID. And that was obviously helped by lots of lower interest rates over the last few years, as well as less reason to travel around and spend money. So people have really been able to reconfigure their financial outcomes. And we have at the same time supported with lots of innovation. As an example, we have probably 3 million customers now already on our NAV money platforms, which give people more savings goals and helping them manage their credit records. And so we're really innovating a lot through our platforms to help people navigate, their financial complexities, both at an individual level and as well as in a commercial capacity. So our customer base is in a much healthier state, and that is a very good position from which we can start growing more positively from here.
Jacques, FirstRand is looking to actually grow outside of South Africa. In the past 2 years, we saw FirstRand acquiring Ghana's biggest mortgage provider, and you have plans to expand into Ghana and Kenya. You're certainly seeing opportunities there in the lending space.
Yeah, I mean, Africa, as you know, is our home. So we have a very, very strong and healthy history in the southern tip of our continent, which, we've been around for 184 years now, since 1838. But we are starting up in sort of, East Africa aspirations, West Africa aspirations. We are a little impatient, but we're not in a hurry. And I think that's growth. It's a good growth prospect for us. But also as I say, we're going in there with our eyes wide open. We've been in many of those countries for quite some time. We've got some platforms to grow from, but it's important that we keep focused on quality growth, not just chasing growth for the sake of it.
While we've seen that rising interest rates are still there, and when you look at your results, the net interest income also climbed 5%. Let's talk about next week, Thursday, the Reserve Bank MPC. We know how they've responded to inflationary pressures. What exactly do you think the number will be? There are some who are saying 50 basis point interest rate increase or 75 basis points. What number do you think the bank is going to come at next week?
Yeah, look, I mean, maybe the different question is, if you stand back a little bit about what should our customers think about as it relates to interest rates. The way we see it is even if it's 50 or 75 basis points up, that brings us more or less, we're more or less in the same territory that we were in 2019 before we went into COVID. So our customer base is quite used to inflation levels and interest rate levels at these. That's different than in the UK, where for the first time in generations, they've experienced inflation and interest rates. So our customers have, through their ability to have structured their balance sheet stronger, are able to absorb, a little bit more. But what is great about our outlook is that it will be short-lived, because within a year or so, we expect that inflation and interest rates to all, normalize again. And so for customers out there to think a little bit more long-term than just the next year or so, there's a longer-term, more stable outcome, more through the cycle view for people to, when they decide their business decisions and their investment strategies, think a bit longer term. Don't necessarily get too focused on the short-term impact, which is, as you say, will be responding, and people must somehow make sure that they set themselves up for that longer-term agenda as opposed to just the short-term impact.
What's your economic growth outlook for quarter 3 in particular, seeing that quarter 2 we were at 0.7%, when it comes to contraction? How do you see the South African economy performing, and what factors are going to be important for policymakers to make sure that we grow at an optimal rate?
Yeah, so we're in, this between 1 and 2 ranges, I guess, is where everyone is anchoring. The important point is that if we can get some of the structural changes right, that could have a really nice lift on outcomes. The difficulty is to gauge exactly what the impact is going to be on energy and that stability, as well as further pressures out of the sort of Europe instability at the moment. But we think, as I said, hopefully, some of the structural changes can help our economy. I mean, we've got a nice boost in our fiscus. We think that if we spend all these monies wisely on proper reforms and structural readjustments in all of these sectors that are so exciting when private sector and government sectors get together, I think the longer term agenda for us is where our orientation is into growth as opposed to contraction.
I know this is something you are very, very proud of as FNB. In the last 2 weeks, you won at the Global Awards the best consumer digital bank in South Africa and the best mobile banking app on the continent. What does this mean for the group actually when it comes to plans going forward?
Yeah, I mean, as you know, we've been investing heavily on solutioning that really differentiates us in the market. And we are unbelievably privileged and grateful for the adoption. Our customers are incredible. They push us hard, they keep us on our toes, they make us innovate. They're expecting 2 clicks instead of 3 clicks and 1 click instead of 2 clicks, and they're expecting, making sure that we make solutions available that really change their lives, as opposed to just to innovate for the sake of it. So these meaningful solutions, it's every now and again you get an opportunity to reflect that when they get noticed and society and community celebrates and recognizes it, that it focuses our mind, it inspires us to do so much more. And when you think of us, in the current context, we have a fit for purpose value proposition. Our solutions are best in class across our range of products, across transactional banking, investments, insurances, lending, innovation to make people navigate life. I mean, we really have a punchy value prop, and we are grateful for the support we get from our customers to use those. Do we have a lot of work left? Absolutely. We have a pipeline of stuff coming. We're excited about the agenda ahead, and we'll continue to keep a proper competitive posture in the market.
And South Africa is on the brink of being grey listed if they don't get their act together, according to the Financial Action Task Force. We know what that would mean. What are your thoughts on what is being done to actually make sure that South Africa does not get grey listed? And what would it mean for the group in particular?
Yeah, I mean, unfortunately, there are these own goal risks. As a country, we would prefer, us not to be in this position, but it is what it is. We have really worked hard, certainly as one participant in the sector, but I know all the banks have really worked hard to bring our efforts to the party. We're not the only participants in this. Obviously, as you know, the entire country's got so many elements that have to come to the party and have helped manage this thing, from law enforcement and regulators and the legal fraternity. There's a lot of participants, but what I'm grateful for is that certainly those seem to be noticed by those who are monitoring us. And what we can hope for from here is 2 things. One is that we might get a little bit more extension, which will be a very good outcome. And failing that, we hope that we would be able to recover from and revert back out of the grey listing, dependent on how quickly we can remedy the mistakes we had. There's some examples in the world where countries are able to come out of it if you have found yourself wanting. But it's, in the best case, it would be great if we can find a little bit more relief and time just to finish the last remaining, outputs that are required for the investigations to happen.
Jacques, that's all the time we have this afternoon. Jacques Celliers is the CEO at First National Bank, joining us about their full year results, which were stellar results that have seen the market welcome what the bank has been doing in the past year.